Hey, what's up guys? John here. One of America's largest commercial landlords and investors is doing something we all have to pay very close attention to because I believe this is likely going to be the #1 real estate opportunity, investing opportunity over the next 5 to 7 years as we start to see cities all throughout America get completely repurposed. We're going to start to see the density in cities expand beyond your wildest imaginations. Look at Silverstein Properties right now. They're investing $1.5 billion to convert office buildings into apartments. And that's what I think is going to be a massive opportunity. If we look at what's happening right now, office buildings, they generate so much tax revenue for the cities that fund police departments, street services, fire stations. They fund so much of the backbones of these cities. And when we see 40 to 50% vacancy rates inside of these offices, the values of these buildings plummets, and with it goes the tax revenue for the city. So these cities could quickly erode into like a third world type of living experience, to say the least. And in this video, I'm going to walk you through exactly what they're doing and what I believe is going to happen over the coming few years and what real estate investors should be doing right now to capitalize on this massive trend. Please hit the like button, hit the like button. YouTube's going to share this content to educate more people about what's really going on in the housing market and real estate. One of New York's largest commercial landlords is spending $1.5 billion to convert office buildings into apartments as office vacancy rates remain elevated. Now, a lot of people don't know this, but when you buy an office building or commercial property, you're going to buy that property and have to refinance it after 3 years, 5 years, 7 years, 10 years. You're going to have a certain window of time in which you have to refinance. It's not like buying a traditional house and you can buy a 30-year fixed rate mortgage and you can simply know what your costs are going to be and you can invest and spend accordingly based on what you can afford. When you buy an office building, a lot of investors over the last 5 years are buying buildings based on a 5% vacancy, meaning that if there's 100 units inside of this building, 5 of the 100 would be vacant at all times. And that would be the norm. However, now we're seeing that 25 to 50% vacancy rate. And so what that means is that the revenue is plummeting, and with it, interest rates are rising. So these commercial property owners are going to have to eventually go back to their bank, whether it be in 6 months or a year, 5 years from now, and the bank is going to say, show me the income over the last 2 years. And they're going to show them income that's 50% or 40% or 30% less. And they're going to say, okay, well, revenue is plummeting. The cost to borrow money is skyrocketing. You're not getting the refinance. And so you're going to see all these distressed property owners. They're going to have to either sell their properties, walk away from their properties, or convert them. That empty high-rise office building in your neighborhood may soon be turned into housing. Silverstein Property, one of America's largest commercial landlords, announced in its first week of December that it's raising more than $1.5 billion to convert unwanted office space into residential housing in markets ranging from New York to San Francisco. Prior to the pandemic, office buildings were the lifeblood of central business districts across the country. Central offices were the reason that employees braved traffic congestion, hopped on public transportation, and bought their morning coffee and bagel at a local bakery. But the 2+ years since the start of the pandemic, office occupancy rates have not fully recovered and remote work continues to gut downtown areas. For example, data of commercial real estate giant CBRE shows that about 25% of all New York offices remain available for lease, while other markets like San Francisco and Boston face similarly higher vacancy rates. These figures are well above their pre-pandemic averages and seem unlikely to change given the high demand for remote and hybrid work opportunities. Silverstein moves also come at a time when commercial real estate property values are declining. Data from Green Street, a commercial real estate market analysis firm, shows that commercial property values have declined by 13% over the past 12 months, which lowers the financial barrier to entry for developers who want to take on the conversion projects. 13%, that's nothing. If you buy a building and the revenue of that building drops by 20, 30, 40%, and the actual property value drops 13%, and then on top of that, interest rates went from 3% to 6%, that's not really a bargain. I personally think we're going to start to see real bargains come in, 40, 50% off a lot of these buildings, because it doesn't factor in the cost to actually convert it. They're going to spend many, many, many millions, tens of millions of dollars doing these conversions, dealing with permits and all the headache associated. We're going to start to see a lot more distress inside this market. They're raising the $1.5 billion now. I think that number is going to skyrocket as their competitors start to really seep in and start to look for these distress opportunities. Silverstein CEO Marty Berger told Bloomberg in a recent interview that these market conditions have created an estimated $10 billion opportunity to convert unwanted offices into new residential housing. Now is the perfect storm where office is not in favor and the residential market is very hot. Hopefully, we can acquire some of these office buildings that may be obsolete or may not be their highest and best use of an office building and convert them to residential. For example, the office building I'm in right now, this building maybe has 20 units, 30 units, really good location. There's probably 7 tenants here, 8 tenants. Everything, for the most part, is always vacant. I never see anyone in the hallways. And I always wonder, how does this landlord really make ends meet? Unless they pay it all cash or put a significant 50, 60, 70% down payment, how do you make ends meet? Now, I think we're going to start to see a lot more of these landlords. This landlord specifically owns a ton of property, so I'm sure he's fine. But just in general, I think we're going to start to see a lot of landlords look to repurpose their buildings if they have the equity, if they have the means to do it, because they can pull a lot more revenue from it. Such conversion projects, also described as adaptive reuse, became a go-to tactic for many residential developers during the pandemic as banks, hotel chains, and even some churches shed their real estate holdings in order to maintain stable financial footing. And another thing I believe is going to happen inside of this real estate market and this economy is we're going to start to see a lot of these mom and pop hotels that own, their 10, 20, 30, 40 unit little hotels. They're going to start getting repurposed into housing and studios, 1-bedroom apartments. As we start to see this economy start to deteriorate, there's going to be less tourism. And there's less tourism, it's going to be a real big problem. And so what's ultimately going to happen, they're going to have to start converting these into long-term fixed income generating units. That's what I believe is going to happen as well. So we're going to start to see so much change come across the real estate market over the next few years. There's just absolutely no doubt about it. Such conversion project, also described as adaptive reuse, became the go-to tactic for many residential real estate developers. According to a November study from Rent Cafe, developers created more than 28,000 apartments through conversion projects in 2021, an increase of 25% when compared to 2020. Well, that's nothing. I mean, they're doing it right now even in Brussels. This isn't just America. They're doing this everywhere. So I believe that number is just going to continue to skyrocket. The same study estimated that roughly 77,000 new apartments will be added nationally via adapted reuse conversions by the end of 2022, so like in the next couple weeks. Should pandemic conditions linger and companies continue to allow employees to work from home, this figure could grow even more in the coming years. Doug Ressler, a business intelligence manager at Yeti Matrix, which helped Rent Cafe compile the report, said the larger office buildings in central business districts and downtown areas are better suited for conversion projects because they're in a dense area with high demand for housing compared to buildings in more suburban markets. Now you look at what this will do. When you start converting these big office buildings and then you have all these real estate investors that bought all these buildings inside of the same area, see other competitive rental inventory hop in, and you start to see a lot more apartments available for rent, what's ultimately going to happen? These landlords are going to be in big trouble. And so as those landlords begin to be in big trouble, that is going to give another opportunity for new investors to step in. So when you're buying a multi-unit property, let's say a 100-unit apartment building, and you're buying it at a 3% return, and then you have a ton of new inventory hit the market, that's going to be a problem. Because if they've reduced rents even 10, 15, 20%, you're going to start to see you're operating in the red. And then ultimately, it's game over for that landlord, right? We're going to see all of this stuff change over the next couple of years. It's going to be unreal to witness. It's probably going to be one of the biggest wealth transformations in real estate history unfold. It says right now, and having already been down a similar path before, Silverstein Property is positioning itself as a leader in emerging markets. The company converted an office building in New York's financial district, 416 units. Then in May of 2022, Silverstein and Metro Loft acquired a 30-story tower at 55th South Broadway. Also in the heart of New York's financial district, roughly $180 million, and plans of turning the buildings into market rate apartments Other developers, such as Emily Hubert, a co-founder of Sage Investment Group, which specializes in multifam conversion projects, suggested that conversions are a cheaper alternative to building new homes from the ground up. And given the cost of borrowing money and construction materials, they both skyrocketed over the past 2 years. Conversions can be a profitable, Hubert said. Sage acquired a condo lodge and a travel lodge in Tacoma, Washington for $14.2 million and plans to convert both buildings into apartments, Hubert told Insider on September, and Sage is expecting each building to produce a return rate of around 40%, similar to other conversion projects that they've completed. Now, what do you think about this? Do you think we're stepping into one of the biggest real estate wealth transfers in human history over the next couple of years? I personally think that's going to be huge. Drop your comments below. If you need help fixing your credit, you want to invest in real estate, but you want access to the best money, you need great credit. We'd love to help you at GreatCreditFast.com. That's GreatCreditFast.com for a free consultation, completely free consultation at GreatCreditFast.com, or call us at 561-430-5900. Subscribe here. Subscribe also to my second channel. It's an interactive call-in show and a podcast. LinkedIn, Twitter, Instagram, and TikTok up in the banner. Also, follow me on short-form content on LinkedIn, Twitter, Instagram, and TikTok. I'm posting there a lot more than I am posting here. And yeah, catch you guys in the next video.